Welcome to the intellectual journey of a lifetime. Imagine a man sitting in a room, surrounded by piles of books, staring at a world that seems to be losing its mind. While everyone else is chasing the next hot tip, screaming over headlines, or panicking at every market dip, this man is perfectly calm. He isn't trying to be brilliant. He is simply trying to be not stupid. That man was Charlie Munger. Most of us know him as the sidekick to Warren Buffett, the billionaire vice chairman of Berkshire Hathaway. But to those who truly study the art of thinking, Charlie wasn't a sidekick. He was the architect. He was the philosopher king of high-stakes decision-making. In for investing logic? Charlie Munger. The Complete Investor author Tren Griffin does something remarkable. He strips away the complex financial jargon and reveals the operating system that powered one of the greatest minds in history. This isn't a book about stock charts. It's a book about worldly wisdom. It's about why a person who understands biology, psychology, physics will always outperform a person who only understands accounting. Why does this matter to you right now? Because we live in an information-rich but wisdom-poor era. We have more data than ever, yet we keep making the same prehistoric mistakes. We get swept up in social proof, we succumb to our own ego, and we ignore the basic laws of reality. Throughout this deep dive, we are going to explore 4 core themes that define the Munger way. The Latticework of Mental Models, why you need a toolbox of ideas from every discipline to see the world clearly. The Psychology of Misjudgment, how to identify the 25 cognitive tripwires that cause smart people to do very dumb things. The Art of Inversion, the revolutionary power of starting at the end and thinking backward. Extreme Patience, why the most profitable action is often doing absolutely nothing at all. Charlie Munger's greatest gift wasn't his bank account. It was his temperament. He famously said, "It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid, instead of trying to be very intelligent." Today, we aren't just learning how to invest. We are learning how to see. We are learning how to build a mind that is resilient, rational, and remarkably effective. Chapter 1. The Worldly Wisdom Narrative. Building your mental latticework. You've got a hang experience on a latticework of models in your head. Charlie Munger. Have you ever noticed how a specialist looks at a problem? If you give a carpenter a broken clock, he might try to shim the gears with a piece of wood. If you give it to a software engineer, they might look for a bug in the mechanical logic. And this is what Munger called the man with a hammer syndrome. To a man with a hammer, every problem looks like a nail. Most of us are educated to be specialists. We go to school to learn one bucket of knowledge, be it economics, marketing, or biology, and then we spend the rest of our lives trying to force the entire complex world to fit into that one tiny bucket. Charlie Munger argued that this is a recipe for disaster. Why? Because the world doesn't care about your degree. The world is a complex, interconnected system where biology affects economics and psychology affects physics. To be a complete investor, and more importantly, a complete human, you need worldly wisdom. ### the latticework. A new way to see. Imagine a literal wooden lattice in a garden. It's a series of intersecting diagonal laths. If you throw a handful of wet clay at a single stick, it falls off. But if you throw it at a lattice, the clay sticks. It has something to grab onto. Munger's worldly wisdom is a mental lattice. He believed that you must learn the big, foundational ideas, the mental models from every major field of study. You don't need to be a PhD in everything. You just need to understand the 80 or 90 big ideas that do about 90% of the heavy lifting in reality. Think about a simple business decision, opening a coffee shop. From physics, you need to understand entropy. If you don't constantly put energy cleaning maintenance into the shop, it will naturally fall into disorder. From biology, you need to understand evolution and adaptation. If a giant Starbucks opens across the street, how will your organism adapt to survive? From psychology, you need to understand social proof. Why do people walk into the crowded shop and ignore the empty one? From mathematics, you need to understand permutations and combinations. How many ways can you fail? If you only use accounting logic, you'll see the costs, but you'll miss the psychological social proof that actually drives the revenue. You'll be blind to the very forces that determine whether you win or lose. The interdisciplinary mind. Munger's genius was his ability to synthesize. He didn't just collect these models like stamps. It watched how they interacted. He called this the Lollapalooza effect. This happens when 3 or 4 models all point in the same direction at the same time. Imagine you are at an auction, social proof. You see others bidding, so you think the item must be valuable. Scarcity. There is only one item. Commitment, consistency bias. You've already made a bid, so you feel a need to keep going to win. Adrenaline. Your biology is screaming at you to fight. When these models collide, you don't just pay a little too much. You pay 500% more than the item is worth. You've been hit by a Lollapalooza. Munger's lattice work allowed him to see these collisions coming from a mile away. While others were getting swept up in the fever, Charlie was standing back, calmly identifying which psychological and mathematical models were currently at play. The high cost of being a one-tool thinker. Think about the 2008 financial crisis. Thousands of brilliant people, PhDs from Ivy League schools, were using complex mathematical models to predict the housing market. They had the math bucket down perfectly, but they lacked the psychology bucket. They didn't account for human greed, the incentive super-response, where people do whatever they are paid to do, regardless of ethics or the feedback loops of panic. Because they only had one model math, they were blind. They're like a pilot flying a 747 who only knows how to read the fuel gauge, but doesn't know what a mountain looks like on radar. Munger's complete investor is someone who is constantly reading, not just business news, but biographies, science journals, and history books. Charlie was a biography nut. He believed that if you want to understand the future, you have to see how humans have behaved for the last 2,000 years. History is just one long laboratory experiment in human nature. Practical wisdom. How to build your own lattice. So, how do you actually do this? You start by becoming a synthesizer. Whenever you encounter a problem, ask yourself, what is the big idea from another field that explains this? If your team at work is unmotivated, don't just look at management theory. Look at biology, energy conservation, or physics inertia. If you are struggling to save money, don't just look at finance. Look at psychology, hyperbolic discounting, our brain's tendency to prefer a small reward now over a big one later. Munger lived by the rule that you shouldn't have an opinion on something unless you can state the opposing argument better than the person who holds it. That is the ultimate test of a mental model. It forces you out of your silo and into the reality of the world. This isn't about being an intellectual. It's about being a survivor in a world where everyone is specialized. The generalist who can connect the dots is the person who holds the power. Charlie Munger didn't want to be the smartest person in the room. He wanted to be the most rational. Rationality requires the full picture, philosophical shift. There is a deep humility in the worldly wisdom approach. It is an admission that you don't know everything. It's a commitment to being a lifelong student. Munger famously said that he and Buffett were learning machines. If they stopped learning for one day, their advantage would begin to evaporate. The complete investor isn't someone who finds a magic formula. They are someone who builds a mental fortress. Every book you read, every model you master is another brick in that wall. Eventually you reach a point where the world no longer looks like a chaotic mess of random events. It starts to look like a predictable series of patterns. You stop reacting. You start observing. As we move forward into the specific psychological traps and investment strategies, keep this lattice in mind. Everything we discuss from inversion to circle of competence is just another lath being added to your mental structure. By the time we are done, you won't just think differently about money. You'll think differently about everything. Key takeaway. You cannot solve complex problems with a single perspective. You must build a latticework of mental models from diverse disciplines to see the world as it truly is. But even with a perfect lattice, there is one thing that can still ruin you, your own brain. In the next chapter, we dive into the internal saboteur, the 25 psychological tendencies that lead to human misjudgment. Chapter 2. The psychology of human misjudgment. Meeting your internal saboteur. If you're going to be a heavy-duty investor, you've got to acknowledge that you're going to have many psychological problems. Charlie Munger. If you think you are a rational person who makes decisions based on logic, Charlie Munger would gently tell you that you are dreaming. Our brains were not designed for the stock market, the internet, or long-term retirement planning. They were designed for the African savanna 50,000 years ago. Back then, if the rest of your tribe started running, you didn't stop to perform a cost-benefit analysis of why they were running. You ran, or you died. That instinct, social proof, kept our ancestors alive. Today, that same instinct causes people to buy into massive financial bubbles like the dot-com crash or Bitcoin frenzies simply because everyone else is doing it. Munger identified 25 standard patterns of human misjudgment. He viewed these not as occasional glitches, but as permanent hardwiring in our brains. To be a successful investor, you don't need to eliminate these biases. You can't. You need to build a system to guard against them. The incentive superresponse, the most powerful force in the universe. Munger's model number 1 was the power of incentives. He famously said, "Never, ever think about something else when you should be thinking about the power of incentives." He often told the story of the Federal Express FedEx sorting system. For years, FedEx struggled to get their packages sorted on time at their central hub at night. They tried everything moral pleas, threatening the workers, changing the management. Nothing worked. Finally, someone realized they were paying the workers by the hour. The workers had a financial incentive to be slow. As soon as they changed the system to pay per shift, allowing the workers to go home the moment the sorting was done, the problem disappeared overnight. In the world of investing, this is lethal. If you ask a real estate agent if you should buy a house, the answer will always be yes. Not because they are evil, but because their brain has been incentivized to see a yes as the right answer. Munger warns that you must always look at the person giving you advice and ask, how does this person get paid? If their paycheck depends on you being wrong, your rationality radar should be screaming. The Lollapalooza of biases. As we touched on in the previous chapter, Munger's real breakthrough was the Lollapalooza effect. This happens when multiple psychological tendencies act in the same direction, creating a chemical reaction that takes over a person's mind. Take the Milgram experiment as a dark example. Why did ordinary people agree to give lethal electric shocks to strangers just because a man in a lab coat told them to? Authority bias. We are wired to obey those who look like they are in charge. Commitment consistency. Once they gave a small shock 15 volts, they felt a psychological need to be consistent with their previous action by giving the next one 30 volts. Doubt avoidance. In a stressful situation, the brain wants to reach a decision quickly to end the discomfort of not knowing. When these 3 biases hit at once, you get a Lollapalooza. You get a situation where good people do horrific things. In investing, a Lollapalooza occurs when you have social proof everyone is buying. Over-optimism, prices always go up. In deprival superreaction, the FOMO or fear of missing out on the gains your neighbor is making. This is how you get a manic market. The availability, misweighting trap. Our brains are lazy. Tend to give more weight to information that is easily available to our memory. If you just watched a news report about a shark attack, you will be terrified to go into the ocean, even though the statistical probability of a shark attack hasn't changed. In finance, this means we over-index on the news of the day. If the headlines are screaming inflation, we forget the 100-year history of the stock market's resilience. We react to the vivid information rather than the true information. Munger's antidote was simple. Checklists. Forcing yourself to look at a preset list of facts, you bypass the availability of your emotions. The psychology of the moat. Understanding psychology also helps you find great businesses. Munger looked for companies that exploited positive psychological tendencies. Why is Coca-Cola so successful? It uses social proof. Everyone drinks it, and classical conditioning associating the product with happiness, holidays, and refreshment. Why is See's Candies, a Berkshire favorite, so powerful? It's because it has a monopoly on the mind. If a man is buying a box of chocolates for his wife for Valentine's Day, he isn't going to look for the cheapest box. He wants the one that signals quality and love. That is a psychological moat. Kant's fairness tendency and the grandmother rule. Munger also looked at the moral side of psychology. He believed that humans have an innate need for fairness. If a business treats its customers unfairly, it might make a lot of money in the short term, but it is poisoning the well, eventually. The fairness tendency will cause customers to revolt. He used the grandmother rule for communication. You don't tell the people what you're going to do until you've told them why. You're going to do it if you explain the why. People are much more likely to accept a difficult decision because their sense of fairness is satisfied. How to defend yourself. Munger didn't just point out these flaws to be cynical. He wanted to build a rationality machine. Here is how he suggested we fight back. Inverse the problem. Instead of asking, how do I make a good decision? Ask, what are the 5 psychological tricks that could make me fall for a bad one? The 2-track analysis. For every decision, do 2 things. Look at the facts rationally, the numbers. Second, look at the psychological, subconscious forces at play. Destroy your own ideas. Munger said you should be eager to find evidence that proves your favorite idea is wrong. If you can't kill your own idea, you aren't ready to hold it. Reflecting on the philosophical depth, there is a certain tragedy to the human condition in Munger's view. We are built in with the seeds of our own failure, but there is also hope. By acknowledging our limitations, we gain an edge over the 99% of people who think they are in total control. Rationality is a moral duty. To Munger, being stupid when you have the tools to be smart was a form of sloth. It was an insult to the potential of the human mind. As we move into the actual mechanics of investing in the next chapter, remember, the math is easy. The psychology is hard. You can teach a 12-year-old how to read a balance sheet, but it takes a lifetime of discipline to watch your portfolio drop 50% and not let Depreval's superreaction force you into a panicked mistake. Key takeaway: your brain is a collection of ancient shortcuts that lead to modern disasters. You must identify the 25 tendencies and use checklists to keep your internal saboteur in check. Now that we've guarded the gates of our mind, we can finally talk about the right stuff, the actual Munger investment philosophy. How do we find the businesses that are worth our time? Chapter 3. The right stuff, the Munger investment philosophy. A great business at a fair price is superior to a fair business at a great price. Charlie Munger. For decades, the world of investing followed the cigar butt strategy pioneered by Benjamin Graham. The idea was simple. Find a dying company that was trading for so cheap that it was like finding a discarded cigar, but on the street. It might be soggy, and it might be gross, but it has one free puff left in it. You buy it, wait for that last puff of value, and then throw it away. Warren Buffett was a master of this. But Charlie Munger changed everything. He looked at Buffett and basically said, Warren, why are we spending our lives looking for garbage? Why don't we just buy the best businesses in the world and sit on them for 50 years? This shift from cheap to quality is the heartbeat of the Munger investment philosophy.
Ow!
The anatomy of a wonderful business. What exactly makes a business wonderful? In Munger's world, it isn't just about high profits this year. It's about the moat. Imagine a medieval castle. It has high walls, strong gates, and most importantly, a wide, deep moat filled with water and maybe a few crocodiles. That moat protects the castle from invaders. In business, a moat is a structural advantage that protects a company from competitors. Munger looked for 4 specific types of moats. Brand power? Think of Disney. If you are a parent, you aren't going to buy a knockoff animated movie to save $5. You want the Disney experience? That brand is a psychological moat that allows Disney to charge more than its competitors. Switching costs. Think of Microsoft Windows. Even if a slightly better operating system came along, the cost of retraining every employee in the world and moving all that data is so high that most companies simply won't do it. They're locked in. Network effects. Think of Visa or MasterCard. Why do merchants accept Visa? Because everyone has a Visa card. Why does everyone have a Visa card? Because every merchant accepts it. The more people use the network, the more valuable the network becomes. Cost advantages. Think of Costco or Geico. These companies have figured out how to operate so efficiently that they can sell products cheaper than anyone else while still making a profit. Competitor can't just start a Costco. They'd have to match decades of logistical genius. The power of compounding the 8th wonder. Munger's obsession with quality was driven by his understanding of compounding. If you buy a cigar but company, you eventually have to sell it. When you sell it, you have to pay taxes, and then you have to find a new company to buy. You are constantly resetting the clock. But if you buy a wonderful company, say, a company that grows its value by 15% every year and you never sell it, the math becomes staggering. Munger realized that if you can find a company that can reinvest its own profits back into itself at a high rate of return, you don't need to do anything else. You just let time do the heavy lifting. This is why he was comfortable paying a fair price for a great company. He knew that over 30 years, the quality of the business would matter 1,000 times more than the price he paid on day one. The unfair advantage. Management and ethics. Munger wasn't just looking at spreadsheets. He was looking at people. He believed that a business is only as good as the incentives of the people running it. He looked for fanatical managers, people who weren't just in it for the paycheck, but people who lived and breathed the business. But there was a catch. They had to be ethical. Munger had a famous newspaper test. Would you be comfortable if a detailed description of your actions appeared on the front page of your local newspaper for your family and friends to read? If the answer was no, Munger didn't want the business. He believed that shortcuts in ethics eventually lead to a collapse in the business. He wanted win-win partnerships where the customers, the employees, and the shareholders all benefited. The sight in your ass method. This leads to the most difficult part of the Munger philosophy: extreme inactivity. Most professional investors feel the need to do something every day. They buy, they sell, they hedge, they trade. Munger viewed this as hyperactive nonsense. He believed that 99% of your time should be spent reading and thinking, and 1% of your time should be spent acting. When you find a right stuff business, your only job is to stay out of the way. Munger famously said, "The big money is not in the buying and the selling, but in the waiting." He compared investing to being a tiger. You wait in the tall grass for a long, long time. You don't jump at every rabbit that passes by. You wait for the big, slow, disabled elephant. And when it finally appears, you strike with everything you have. Gulp factor. Concentrated investing. Because Munger only wanted the best of the best, he didn't believe in diversification. The modern financial world tells you to own 100 different stocks to reduce risk. Munger thought this was diversification. He believed that if you truly understand 5 great businesses, you are much safer than someone who knows nothing about 100 businesses. The wise ones bet heavily when the world offers them that opportunity, Munger said. They bet big when they have the odds. The rest of the time, they don't. It's just that simple. This requires a stomach of iron. If you only own 3 stocks, and one of them drops 30%, your entire net worth looks like it's in trouble. But Munger didn't care about the price on the screen. He cared about the value of the business. If the business was still great, the price drop was just a gift. Philosophical reflection, quality in life. There is a deeper lesson here that goes beyond money. Munger's right stuff philosophy is about quality over quantity. In our lives, we often chase cigar butts. We take cigar butt jobs because they pay a little more right now. Even though they have no future, we have cigar butt friendships that are convenient but don't nourish us. We read cigar butt news that gives us a quick hit of adrenaline but no wisdom. Munger challenges us to pivot, to look for the wonderful things, to build a career that compounds, where your skills today make you better tomorrow, to cultivate friendships that have moats built on years of trust and shared values, to invest your time in high-quality books and ideas that will still be true 20 years from now. The complete investor is a curator. They are someone who has the discipline to say no to the 99% of fair opportunities so they can say yes to the 1% of wonderful ones. Key takeaway: stop looking for cheap opportunities and start looking for wonderful businesses with durable moats. Once you find them, let the power of compounding do the work for you. Finding a great business is one thing. Having the discipline to wait for it, then wait with it, is another. In the next chapter, we explore the art of doing nothing. Chapter 4. The art of doing nothing. Patience, discipline, and the sit-in-your-ass method. Success means being very patient but aggressive when it's time. Charlie Munger. If you walk into a professional investment firm today, you will see rows of high-speed monitors, flashing red and green lights, and people shouting into phones. Looks like work. It feels productive. But to Charlie Munger, most of that activity was worse than useless. It was actively harmful to wealth. Munger pioneered what he jokingly called sit-on-your-ass investing. It sounds lazy, but it is actually one of the most disciplined mental frameworks ever devised. It is the realization that in a world of 8 billion people, truly great opportunities are rare. If you are doing something every day, you aren't investing. If you're reacting, the bias toward action, evolutionarily, we are doers. If our ancestors heard a rustle in the grass, the ones who did nothing were often the ones who got eaten. We have a deep-seated action bias, the feeling that if we aren't moving, we aren't making progress. In the stock market, this manifests as overtrading. People buy a stock, and if it doesn't move for 3 months, they get bored. They feel they need to rotate their capital. They sell the great company that is just resting and buy a mediocre company that is currently hot. Munger realized that every time you trade, you face three enemies: the friction of costs, commissions, and fees. The taxman. Every time you realize a gain, the government takes a slice. This breaks the chain of compounding. Your own ego, every trade is a new decision where you could be wrong. By doing nothing, you avoid all three. You allow the internal compounding of a great business to work for you, tax-deferred for decades. The tiger in the grass philosophy. Munger often used the analogy of a predator. A tiger doesn't hunt by running around the jungle all day, hoping to bump into something. That would waste too much energy. Out. Instead, the tiger finds a watering hole. It hides in the tall grass. It waits. Might wait for days. It watches many animals pass by that are too fast, too big, or too far away. It does nothing until the perfect moment. When the fat pitch arrives, the disabled wildebeest that has wandered too far from the F. The tiger strikes with a level of aggression that is terrifying. This is how Munger and Buffett operated. It would go years sometimes, nearly a decade without making a major acquisition. They sat on mountains of cash, enduring the ridicule of Wall Street analysts who claimed they had lost their touch. Then, when a market crash happened like in 1987, 2000 or 2008, and everyone else was panicking, they would spend billions of dollars in a single week. The 20-slot punch card. To help people visualize this discipline, Munger suggested a mental exercise. Imagine you are given a punch card with only 20 slots on it. This card represents all the investments you are allowed to make in your entire lifetime. Once you punch all 20 holes, you can never invest again. Under those rules, would you buy that decent tech stock your cousin mentioned at Thanksgiving? Probably not. You would save your punches for the absolute no-brainers. This selective excellence is the hallmark of the complete investor. If you can't find something that is 10 times better than what you already own, why bother? Most people's portfolios are full of slot 21 through slot 100 ideas, decisions made out of boredom, not conviction. The discipline of the wait, the art of doing nothing, isn't just about waiting to buy. It's about the discipline to hold. Munger noted that the most successful investors are often the ones who forgot they owned a stock. There is a famous story about a woman who bought shares of a quality company in the 1940s, put the certificates in a box, and didn't look at them for 50 years. She became a multimillionaire while her neighbors, who were constantly trading up, ended up with average returns. When you own a piece of a wonderful business, as we discussed in Chapter 3, time is your friend. You don't need to check the stock price every hour. In fact, checking the price is a psychological trap. It triggers Depreval's superreaction, the pain of seeing a small drop, or over-optimism, the greed of seeing a small rise. Both lead to tinkering, and tinkering is the enemy of compounding. Patience in life, the delayed gratification muscle. This philosophy extends far beyond the stock market. Munger viewed the ability to delay gratification as the primary predictor of success in any field. In your career, are you willing to spend 5 years mastering a difficult skill without a promotion, knowing it will make you unfireable in 10 years? In your health, can you do nothing avoid the junk food today for a reward that won't show up on the scale for 6 months? Munger believed that the world is set up to reward the few people who can wait. Because everyone else is so impatient, the waiting room is empty. There is no competition in being patient. The philosophical meaning of Siddhanura's, there is a profound humility in Munger's stillness. It is an admission that we do not control the world. We cannot force a great opportunity to appear just because we want to make money today. The market provides the opportunities. We simply provide the readiness. Munger lived a life of assiduity. He was always reading, always learning, always preparing. His doing nothing wasn't actually idle. He was sharpening his axe for years, so that when he finally saw the right tree, he could cut it down in a single swing. He often quoted the French philosopher Blaise Pascal. All of humanity's problems stem from man's inability to sit quietly in a room alone. The complete investor is someone who has conquered their own restlessness. They don't feel the need to win every day. They're comfortable being out of the loop. They have an internal compass that doesn't spin just because the wind is blowing. How to practice the art of doing nothing. Increase your threshold for action. Make it very hard for a new idea to get into your life. If it isn't a hell yes, it's a no. Uninstall the noise. Stop looking at daily price fluctuations. If you've done your worldly wisdom homework, the daily news is just entertainment, not information. Focus on process, not outcome. If you followed your checklist and the market still went down, you haven't failed, you've simply waited. Embrace boredom. If your investing or your self-improvement feels like a thrilling roller coaster, you're probably doing it wrong. Real compounding is as exciting as watching grass grow, but it eventually leads to a forest. Key takeaway: the action bias is a wealth killer. True success comes from the discipline to wait for the rare fat pitch and the stomach to hold on to great assets without tinkering. But where should you be looking for these pitches? You can't be an expert in everything. In the next chapter, we define the boundaries of your power, the circle of competence. Chapter 5. The circle of competence. Knowing the boundaries of your power, knowing what you don't know is more useful than being brilliant. Charlie Munger. In the world of professional sports, we understand the circle of competence instinctively. You wouldn't ask a world-class marathon runner to step into a boxing ring with a heavyweight champion. You wouldn't ask a grandmaster chess player to lead a surgical team through a heart transplant. We accept that greatness is specialized. But in the world of thinking and investing, we suffer from a strange delusion. We think that because we are smart in one area, we are smart in all areas. This is what Munger called the ego-driven leap. The complete investor is someone who has the humility to draw a circle around what they truly understand and the discipline to never, ever step outside of it. The definition of the circle. Your circle of competence is the area where you have a genuine edge. It is the intersection of three things. Experience. You have spent years observing the patterns in this field. Study. You understand the fundamental mental models, the lattice work that govern this specific domain. Feedback. You have made mistakes in this area and learned exactly why they happened. If you grew up in a family that ran a retail clothing store, you might have a circle of competence in consumer retail. You understand inventory, seasonal trends, and customer psychology. You know it in your bones. If you then try to invest in a biotechnology startup developing a new cancer drug, you have stepped outside your circle. You are no longer an investor. You are a gambler. The why behind the boundary. Why was Munger so obsessed with staying inside the circle? Because the world is full of sharks. Whenever you enter a market or a negotiation, you are competing against people who have made that specific niche their life's work. If you are a general smart person buying a tech stock, you are trading against engineers and analysts who live and breathe that technology 18 hours a day. Munger's logic was simple. If you play a game where other people have an aptitude and you don't, you're going to lose. The goal isn't to have the biggest circle in the room. You don't need to understand every industry, every cryptocurrency, or every geopolitical shift. You only need to be right about a few things, as Munger famously said. It's not a competency if you don't know where the edge of it is, the danger of the smart person trap. Munger often observed that people with high IQs are actually at greater risk of stepping out of their circle. Why? Because they are used to being the smartest person in the room. They become overconfident. They think that because they mastered physics or law, they can easily master macroeconomics or venture capital. This is the man with a hammer syndrome returning in a different form. The physicist tries to apply the laws of thermodynamics to the stock market. It looks brilliant on paper, but it fails in reality because the stock market is governed by human psychology, not heat transfer. To Munger, the complete investor must be a realist. You must look in the mirror and say, I am an expert in X, but I am a complete moron in Y. There is an immense power in that confession. It protects you from the 90% of mistakes that ruin other people. How to identify your own circle? Most people struggle to find their circle because they confuse interest with competence. Reading a few articles about AI doesn't put AI in your circle. Owning a smartphone doesn't put the telecommunications industry in your circle. To test if something is truly in your circle, Munger suggests they explain it to a 6-year-old test, often attributed to Feynman, but a staple of Munger's logic. If you cannot explain the fundamental reason why a business makes money, and why it will still be making money in 10 years, using simple language without jargon, then you don't understand it. It is outside your circle. Another test is the counter-argument test. Can you state the reasons why this investment might fail more clearly than the person who is betting against you? If you can't, you haven't done enough work to claim competence. The too hard pile. Munger's ultimate weapon. This is perhaps the most practical tool in the Munger toolkit. On Charlie's desk at Berkshire Hathaway, he mentally and sometimes physically had 3 baskets for incoming deals. Yes, no, too hard. The too hard pile was by far the largest. If a business had a complex technological component he didn't understand, or if its future depended on a single genius CEO, or if the accounting looked creative, it went straight into the too hard pile. Most people feel a psychological pressure to have an opinion on everything. If someone asks you about the future of green hydrogen, you feel dumb if you say, "I don't know." Munger felt the opposite. He felt that saying, "I don't know," was the highest form of intelligence. It meant he was protecting his capital and his mind for the things he did know, expanding the circle slowly. Does this mean you can never learn anything new? No. Munger was a learning machine, but he expanded his circle with extreme caution. He didn't jump into new fields. He vetted them over years of reading and observation. He didn't move from one circle to another. He allowed his circle to grow organically, like the rings of a tree. He started with law, then moved to real estate, then to value investing, then to quality businesses, then to the psychology of human misjudgment. Each new area of competence was built on the foundation of the previous one. Philosophical reflection, the humility of greatness. There is a deep philosophical lesson in the circle of competence, the recognition of limits. We live in a culture that tells us you can be anything and the sky is the limit. Munger's advice is the opposite, he says. Find what you are naturally good at. Find where your unique experience gives you an edge, and stay there. In life, we are often pressured to be well-rounded. We are told to fix our weaknesses, Munger would say. Don't bother fixing your weaknesses. Just build a life where your weaknesses don't matter. If you aren't good at managing people, don't try to be a CEO of a 5,000-person company. Find a way to be a world-class individual contributor. The complete investor doesn't try to conquer the world. They try to dominate their tiny corner of it. By staying within your circle, you eliminate the noise. Stop worrying about what you're missing out on, because you know you wouldn't have understood it anyway. This leads to a calm mind. When you know exactly where your boundaries are, you don't feel the FOMO fear of missing out when a bubble is happening outside your circle. You can watch people make millions in a hot sector and feel zero envy because you know that sector is in your too hard pile. You are waiting for the ball to enter your court. Practical application for your life. Inventory your circles. Write down 3 areas where you have more knowledge than 90% of the population. This could be your job, a hobby you've had for a decade, or a specific local market. Define the no-fly zones. Write down 3 things you are interested in, but don't actually understand the mechanics of. Commit to never putting significant money or time into these until you move them into the competence column. Use the too hard pile daily. When a friend suggests a surefire business idea or a new productivity hack that sounds complicated, give yourself permission to put it in the too hard pile. Specialization for success. Remember that the world pays for excellence, and excellence is almost always found within a tight circle. Key takeaway: you don't need to be an expert on everything to succeed. You just need to accurately define the boundaries of what you know and have the discipline to stay inside them. But even when an opportunity lands inside your circle, how do you solve the problems that come with it? Sometimes thinking forward isn't enough. Sometimes you have to turn the world upside down. In the next chapter, we explore Munger's most famous thinking tool, inversion. Chapter 6. Inversion. The revolutionary power of thinking backward. Invert. Always invert. Turn a situation or problem upside down. Look at it backward. Charlie Munger. Imagine you are a gardener, and you want your lawn to be the most beautiful in the neighborhood. Most people would go to the store and ask, "What fertilizer should I buy to make my grass green?" They look for the additive solution, the thing they can do to achieve success. Munger would take the opposite approach. He would sit on his porch and ask, "What are the things that would absolutely guarantee my lawn stays brown and ugly?" I could forget to water it. I could let the weeds grow out of control. I could spill oil on it. I could cut it too short during a heat wave. Now, instead of chasing a magical fertilizer, Munger has a clear list of behaviors to avoid. If he simply doesn't do those 4 things, a beautiful lawn is almost an inevitable byproduct. This is inversion. It is the art of solving problems by focusing on what you don't want to happen. The inverse origin story. Munger borrowed this concept from a German mathematician named Carl Jacobi, who famously said, Man must immer mukieren, one must always invert. Jacobi believed that many difficult problems in algebra were impossible to solve by looking at them forward, but became child's play when you started at the solution and worked back to the beginning. Munger applied this to everything from his personal life to his multi-billion-dollar investments, believed that while it is very difficult to be brilliant, it is remarkably easy to avoid being stupid. If you can just avoid the standard shipwrecks of life, you will likely end up in a very good place. Inverting Success, the How to Fail Manual. Let's apply inversion to your career. If you want to be a top performer at your company, don't start by asking, how do I get a promotion? Instead ask, how could I guarantee that I get fired or remain stuck in the same position for 20 years? I could show up late every day. I could be unreliable and miss deadlines. I could avoid learning new skills. It could be difficult to work with and complain constantly. By identifying these failure paths, you create a defensive perimeter around your career. Most people fail not because they weren't brilliant, but because they stepped on a career landmine they didn't see coming. Inversion forces you to see the landmines first, the premortem, avoiding financial disasters. In the world of investing, Munger used inversion to perform what we now call a premortem. Before he bought a stock, he wouldn't just look at how much money he could make. He would imagine that it is 5 years in the future and the company has gone bankrupt. Then he would ask, what happened? Did a competitor invent a better technology? Did the management take on too much debt? Did the moat evaporate? Did the government change the regulations? By imagining the corpse of the business before he ever bought it, he could decide if those risks were acceptable. If he couldn't think of a way the business could fail, he knew he was being over-optimistic. If he saw a clear path to failure, he put it in the no basket. Inverting happiness. Avoiding the misery traps. One of Munger's most famous speeches was at a high school graduation. Instead of giving the usual follow your dreams advice, he gave a speech on how to guarantee a life of misery. He told the students that if they wanted to be miserable, they should be unreliable. Learn nothing from the mistakes of others, insist on making all the mistakes yourself. Stay down after your first, second, or third failure. Be envious and resentful. The audience was stunned. But Munger's point was profound. It is much easier to define misery than it is to define happiness. If you avoid the things that cause misery, addiction, envy, unreliability, and resentment, you have cleared the path for a meaningful life to emerge on its own. The engineering mindset. Safety factors. Munger was also trained as a meteorologist during World War II. He had a deep appreciation for engineering logic. Engineers use inversion when they build bridges. They don't just ask how much weight can this bridge hold. They ask, under what conditions will this bridge collapse? They then build in a margin of safety. If the bridge needs to hold 10,000 pounds, they build it to hold 30,000. As a complete investor, you should do the same. If you think a company is worth $100, don't buy it for $95. Buy it for $60. That way, even if your forward thinking is wrong, even if you aren't as smart as you think you are, the inverted reality of the low price protects you from ruin. Psychological inversion. The power of not being a fool. There is a psychological relief that comes with inversion. We live in a world of optimization culture, where we are constantly pressured to find the best workout, the best diet, the best side hustle. This creates immense anxiety. Munger's inversion is a form of subtracting logic. It suggests that life is often more about what you remove than what you add. You don't need a perfect diet. You just need to stop eating things that make you sick. You don't need a perfect investment strategy. You just need to stop buying things you don't understand with money you don't have. This leads to what Munger called the great mental models of not being a fool. He believed that the winners in life are simply the people who stayed in the game the longest because they avoided the zeroing out events that took everyone else out, reflecting on the philosophical depth. Inversion is ultimately a tool of humility. It is an admission that the future is unpredictable and that our brains are fallible. By focusing on avoiding failure, we acknowledge that we are not gods who can manifest success through sheer will. We are more like sailors in a storm. We cannot control the wind, the market, the world, but we can make sure there are no holes in our boat. The complete investor is a master of the negative space. They see what isn't there. They see the risks that others ignore because they are too blinded by the upside. Practical exercises for your week. The anti-goal. Exercise. Pick one goal you have, for example. I want to save $10,000. Now write down exactly how you could guarantee you never save a penny. Look at that list. That is your forbidden list for the next year. The relationship premortem. If you are in a partnership, business, or personal, imagine it has ended bitterly 3 years from now. What caused it? Was it a lack of communication? A money stress? Dishonesty? Address those inverted causes today. The decision audit. Before your next big purchase or career move, spend 10 minutes trying to prove yourself wrong. Try to break your own logic. If you can't break it, the decision is much stronger. Key takeaway. You don't need to be a genius to win. You just need to consistently avoid the standard shipwrecks of life by thinking backward and identifying the paths to failure. Even with inversion, you need a foundation. You need a system to value things. In the next chapter, we look at where Munger's journey began. The Graham value investing system and how Charlie evolved it into something even greater. Chapter 7. The Graham value investing system and the Munger pivot. All intelligent investing is value investing, acquiring more than you are paying for. Charlie Munger. In the 1930s, the world of investing was a dark, chaotic place. The Great Depression had destroyed fortunes, and most people viewed the stock market as a rigged casino. Then came Benjamin Graham. Graham brought the scientific method to finance. He argued that a stock isn't just a ticker symbol that wiggles on a screen. It is a legal claim on a real business with real assets. Graham's system was built on a single, powerful concept: intrinsic value. He believed that every company had a true value based on its cash, buildings, and inventory. If the market was panicking and selling that company for less than its liquidation value, you bought it. The cigar butt era. As we touched on earlier, this led to the cigar butt style of investing. Graham looked for net companies that were trading for less than the value of their current assets minus all their debts. Basically, you were buying $1 for 50 cents. It didn't matter if the company was a failing textile mill or a dying department store. As long as the assets were there, it was a value play. Warren Buffett was Graham's star pupil, became a millionaire by hunting these soggy cigar butts. But as the economy evolved after World War II, these opportunities began to disappear. The world was becoming more competitive, and cheap assets were often cheap for a reason. They were being disrupted. The Munger pivot. From assets to earnings. Enter Charlie Munger. Charlie looked at Graham's system and saw a fatal flaw. If you buy a mediocre business because it's cheap, time is your enemy. Every day that passes, the mediocre management wastes more of your capital. You are in a race against the clock to sell the stock before the business rots away. Munger proposed a radical shift. Forget the cigar butts. Look for the compounding machines. He famously convinced Buffett to change his entire approach. He argued that it is far better to pay a fair price for a business that is growing and has a durable competitive advantage than to pay a bargain price for a business that is stagnating. The mathematics of the pivot. Why was Charlie so insistent on this? It comes down to the math of the internal rate of return. If you buy a stock at a 50% discount to its asset value, but the business doesn't grow, you might make a one-time gain of 100% when the market eventually recognizes the value. That's great. But then you have to find a new place to put your money. However, if you buy a high-quality business that earns a 20% return on its capital and can reinvest those earnings year after year, the compounding effect is explosive. Munger realized that over 20 or 30 years, your total return will almost exactly match the return on capital of the business itself, regardless of what price you paid at the beginning. The value in value investing. Munger didn't abandon Graham's core principle. He just expanded the definition of value. To Graham, value was physical: steel, land, cash. To Munger, value was intangible: brand, customer loyalty, management integrity. And the moat. Munger recognized that a company like See's Candies didn't have a lot of expensive machinery or huge warehouses. Its value was in the minds of the people in California who wouldn't dream of buying any other chocolate for their mothers on Mother's Day. That mental real estate was more valuable than any factory. The margin of safety. Reimagined.
Yes.
Munger's margin of safety was the quality of the business. If a company has a massive competitive advantage, a moat, and a long runway for growth, that quality acts as a buffer. Even if the economy has a recession, or even if the management makes a small mistake, the strength of the business will pull it through. The value is in the resilience of the earnings. The partnership, Buffett and Munger. This pivot transformed Berkshire Hathaway from a failing textile mill, a classic Graham cigar, but into a global powerhouse. Buffett provided the capital and the focus, but Munger provided the quality filter. Whenever Buffett was tempted to buy a cheap, mediocre company, Munger would growl, "Warren, that's a terrible business. Let's wait for something great." Together, they moved from value in the sense of cheapness to value in the sense of enduring excellence. The gulp of paying up. One of the hardest parts of the Munger system is the psychological hurdle of paying a fair price. We are wired to love a bargain. It feels good to get a discount. Munger argues that you have to train your brain to gulp and pay for quality. He looked at companies like Costco. To a traditional value investor, Costco always looked expensive. Its price-to-earnings ratio was always high. But Munger saw that Costco had a unique model. It sold items at cost and made all its profit from membership fees. It was a subscription to low prices. Because the business model was so superior, Munger knew it was actually cheap in the long run. He held Costco for decades, while Graham-style investors missed out because they were waiting for a discount that never came. Philosophical reflection, the evolution of truth. There is a lesson here about intellectual growth. Munger didn't disrespect Benjamin Graham. He built upon him, took a foundation of rationality, and added a layer of psychological insight. In our own lives, we often cling to rules we learned early on. We stick to a specific way of working or thinking because it worked in the past. Munger teaches us to be adaptive rationalists. When the world changes, when cigar butts become scarce, you must have the intellectual courage to pivot your strategy while keeping your core values like rationality and discipline intact. The complete investor is not a dogmatist. They are a seeker of what works. They are willing to kill their own ideas if a better idea comes along. Munger's pivot wasn't about being right. It was about being less wrong about how the world actually generates wealth. Practical application, finding your pivot. Stop bargain hunting for your life. Are you taking the cheap option in your health or education? Are you buying cigar butt clothes that fall apart in 3 months? Pivot to quality. Pay a fair price for something that will last and compound. Evaluate your moat. If you are an entrepreneur or a professional, don't just look at your assets, your degree. Look at your earnings power. What makes you difficult to replace? That is your true value. The quality audit. Look at your investments or your projects. If you were forced to hold them for 10 years without selling, which ones would you keep? Those are your Munger-style winners. Get rid of the rest. Key takeaway. Real value isn't found in cheap assets, but in high-quality businesses with durable competitive advantages that can compound their earnings over decades. But how do you stay organized in this world of complex ideas? Even with the right philosophy, the human brain is prone to simple errors. In the next chapter, we look at the pilot's secret weapon, checklists and systems. Chapter 8. Checklists and Systems. Avoiding aviation-style disasters in finance. I'm a great believer in solving hard problems by using a checklist. You need to get all the likely and unlikely factors before you. Otherwise, it's easy to miss something important. Charlie Munger. Think about a Boeing 747 pilot. This is a person with thousands of hours of training, a deep understanding of physics, and a high-stakes responsibility for hundreds of lives. Yet, before every single takeoff, that pilot pulls out a piece of paper and goes through a checklist. Fuel levels. Check. Flaps. Check. Landing gear. Check. The pilot doesn't do this because they are forgetful. They do it because the cockpit is a high-stress environment where human error is the leading cause of catastrophe. Munger realized that the cockpit of an investor, the space between your ears when you are deciding where to put your life. Savings is just as dangerous and prone to failure. The tyranny of the expert ego. Most people in finance hate checklists. They think they are too smart for them. They want to rely on their gut or their intuition. Munger viewed this as pure arrogance. He believed that the more complex a system is, the more likely you are to overlook a small variable that ends up blowing the whole thing apart. A checklist isn't a sign of weakness. It is a sign of professionalism. It is the manual override for your lizard brain. When you are excited about a new investment, your brain is flooded with dopamine. You start seeing only the upside. A checklist forces you to slow down and answer the difficult questions you'd rather ignore. The Munger investment checklist, the 4 filters. While Munger had many lists, he frequently returned to 4 filters that every business had to pass before he would even consider it. Think of these as the engine check for a multi-billion-dollar machine. Is the business understandable? Is a circle of competence check? If I can't draw a diagram of how this company makes a dollar, I'm done. Does it have an enduring competitive advantage?
Ow.
The moat check. If this company makes a lot of money today, what stops 5 people from starting a competitor tomorrow and stealing those profits? Does it have able and trustworthy management? The integrity check. Would I trust these people with my own wallet? Do they have skin in the game? Or are they just employees waiting for a bonus? Is the price right? The margin of safety check? Even the best business is a bad investment if you pay too much for it. If a company failed just one of these filters, Munger didn't negotiate with himself. He didn't say, well, the management is sketchy, but the price is so low. Simply put it in the no basket. A checklist is only useful if you have the discipline to follow it when it tells you something you don't want to hear. The psychological checklist. Munger's most unique system was his psychological checklist before making a final decision. He would go through his list of 25 tendencies of human misjudgment, which we covered in Chapter 2. He would ask himself, am I buying this just because Warren likes it? Social proof? Am I buying this because I've already spent 3 weeks researching it and I don't want to feel like I wasted my time? Is the CEO's charisma blinding me to the bad numbers? Authority bias? Liking loving tendency? By running this internal audit, Munger was able to step outside of his own skin and look at his decision-making process objectively. He was hunting for his own biases, like a detective hunting for clues at a crime scene. The power of systems over goals. Munger was an early advocate of what James Clear would later popularize. The idea that you don't rise to the level of your goals, you fall to the level of your systems. A goal is I want to be a millionaire. A system is I have a checklist that I follow for every purchase. I read 500 pages of business history every week, and I automate 20% of my income into high-quality assets. Munger's life was a series of overlapping systems. He had a system for reading, a system for meeting people, and a system for managing his time. He didn't leave his success to luck or inspiration. He engineered it through the relentless application of these mental tools. Systemic thinking, the feedback loop. A great system must be anti-fragile. It must get better over time. Munger was obsessed with the post-mortem. When a decision went wrong, he didn't just blame bad luck. He went back to his checklist and asked, which item did I miss? Or do I need to add a new item to the list so this never happens again? He viewed mistakes as the most expensive tuition you can pay. If you don't learn from the mistake, you've wasted the money. If you incorporate the lesson into your system, you've bought an asset that will pay dividends for the rest of your life. Checklists for life. The standard shipwrecks. You can apply this aviation-style logic to your daily life. Why do most New Year's resolutions fail? Because people have goals but no checklists. If you want to get fit, your morning checklist should be gym clothes laid out, water bottle filled, phone in do not disturb mode. If you want to be a better partner, your weekly checklist might be, did I express gratitude today? Have we scheduled a no-phone walk this week? It sounds robotic, but as Munger would argue, the robotics of a checklist is what sets your spirit free. When you don't have to waste mental energy remembering the basics, you can use that energy to be creative, present, and strategic. Philosophical reflection, the humility of the list. There is a profound spiritual humility in using a checklist. It is a daily confession that you are not a god. It is an admission that you are a flawed, biological creature, prone to pride, fatigue, and error. Munger, a man worth billions, still sat down with his mental lists. He didn't think he was above the process. In fact, he believed that the higher you climb, the more important the checklist becomes, because the cost of a simple error grows exponentially. The complete investor is a person who has automated the avoidance of stupidity so they can focus on the pursuit of wisdom. They have built a cage for their inner saboteur, and that cage is made of the iron bars of a well-designed system. Practical application: building your standard operating procedure. The Big Three decision list. Identify the 3 most frequent types of decisions you make. For example, hiring, spending over $500, or committing to a new project. Create a 5-item must-pass checklist for each. The morning pre-flight. Create a 3-minute checklist for the first hour of your day to ensure you don't fall into reactive mode. Checking email, social media. The kill your idea session. Once a month, take your biggest current project and run it through a red team checklist. Ask, if this fails, what is the most likely reason? Key takeaway: even the most brilliant mind requires a system. Use checklists to bypass your emotional biases and ensure you never overlook the fundamental safety checks of a decision. But what happens when these systems and models don't just work individually, but start to feed into each other? This leads us to Munger's most explosive concept, the Lollapalooza effect. Chapter 9. Building a Lollapalooza effect. When models collide, the most relevant model, of course, is the Lollapalooza. The result that occurs when several forces are all acting in the same direction. Charlie Munger. In the world of chemistry, you can have 2 relatively harmless substances. Take sodium, a highly reactive metal that can explode in water. Take chlorine, a toxic gas used as a chemical weapon in World War I. Individually, they are dangerous. But when you combine them, you don't get a double poison. You get sodium chloride, common table salt, something essential for human life. This is a non-linear outcome. The combination creates a third reality that is fundamentally different from the parts. Munger realized that the world's biggest successes and its most horrific failures are rarely the result of a single factor. Instead, they are Lollapalooza's moments where 3, 4, or 5 mental models all point in the same direction at the same time, creating a tidal wave of momentum that is almost impossible to stop. The anatomy of a positive Lollapalooza, the Coca-Cola example. Munger's favorite example of a Lollapalooza was the rise of Coca-Cola. He famously wrote a mental exercise about how to build a $2 trillion business from scratch. He didn't just look at the recipe. He looked at the psychological Lollapalooza, conditioned reflex classical conditioning through massive advertising. Coke associated its flavor with happiness, youth, and celebration. Every time you felt happy, you wanted a Coke. Every time you drank a Coke, you felt a micro hit of happiness. Social proof. Because everyone else was drinking it, your tribal brain assumed it was safe and desirable. Availability. By making the drink available in every vending machine, gas station, and restaurant on Earth. They exploited the availability misweighting tendency. If it's there, you buy it. Flavor nuance. The flavor was designed to be non-satiating. Most sweet drinks make you feel full or tired of the taste after one glass. Coke's flavor profile allowed for heavy consumption without the brain signaling you to stop. When you put these together, you don't just get a successful soda company. You get a global monopoly on the human thirst reflex. That is a positive Lollapalooza. The anatomy of a negative Lollapalooza, the open outcry auction. On the flip side, Munger used inversion to show how Lollapaloozas can lead to total ruin. He hated open outcry auctions, the ones where people shout their bids in a room. Why? Because they are Lollapalooza factories for bad decisions. Social proof. You see others bidding, so you know the item is valuable. Reciprocity tendency. You feel a need to respond to the other person's bid. Deprival, super reaction. The fear of losing the item to someone else causes a panic response. It's no longer about the item. It's about not letting the other person win. Commitment, consistency. Once you've raised your hand for $1,000, your ego won't let you stop when the price hits $2,000, because you've already publicly committed to being a buyer. In that moment, a smart person becomes a fool. The Lollapalooza of these 4 biases overrides the prefrontal cortex, the rational part of the brain, and the steering wheel to the amygdala, the multidisciplinary requirement. You cannot see a Lollapalooza coming if you only have one bucket of knowledge. A psychologist will see the biases but might miss the economics, the supply and demand. Or a mathematician will see the numbers but might miss the biology, the adrenaline surge. To build or identify a Lollapalooza, you must use your latticework of mental models. You have to ask, what are the 5 different forces acting on this situation right now? Are they fighting each other, or are they all pushing in the same direction? When they all push in the same direction, you should either bet your entire life savings if it's a wonderful business, or run for your life if it's a market bubble. Systems thinking, the flywheel. In modern business, we often call a positive Lollapalooza a flywheel. This is a system where each part of the process makes the next part easier and more powerful. Take Amazon. Lower prices lead to more customers. More customers attract more third-party sellers. More sellers lead to a bigger selection and better logistics. Better logistics lead to lower prices. The circle keeps spinning, getting faster and heavier with every turn. This isn't just good management, it's a structural Lollapalooza. Munger's goal as an investor was to find these flywheels early and hold them until the end of time. The moral Lollapalooza. Munger also applied this to ethics. He believed that when a company has incentive super response paying people to do the wrong thing, combined with social proof everyone else is doing it, and authority bias the boss says it's okay, you get a moral disaster like the Enron scandal or the 2008 subprime mortgage crisis. He argued that as a leader, you must invert the Lollapalooza. You must design systems where the incentives, the social proof, and the rituals all point toward integrity. If you pay people to be honest, and they see their peers being rewarded for honesty, the social proof of the office is one of high characters you get a Lollapalooza of excellence. How to spot a Lollapalooza in your own life. You are currently living in the result of your own Lollapaloozas. If your life feels stuck, it's likely because you have several forces pulling you in opposite directions. You want to be healthy goal, but your friends all eat junk food social proof? Your job is high-stress biology, cortisol, and your kitchen is full of snacks availability. That is a negative Lollapalooza. Your environment is perfectly designed to keep you unhealthy. To change, you don't need more willpower. You need to re-engineer the Lollapalooza. Change your environment so healthy food is the most available. Find a tribe of fit people to gain the power of social proof. Set up incentives, for example. Commitment contract where you pay a friend if you miss a workout. When these forces align, success stops being a struggle and starts being a result. It becomes the path of least resistance. Philosophical reflection, the power of synthesis. Munger's Lollapalooza concept is a reminder that the world is a complex web, not a series of isolated events. Most of us are taught to analyze, break things down into small parts. Munger teaches us to synthesize, put things together to see the whole. The complete investor is a synthesizer. They are looking for the resonance, the moment when the frequency of the market, the frequency of psychology, and the frequency of the business model all match up. When that resonance happens, the results are legendary. Practical application. Your Lollapalooza audit. Analyze your successes. Look at the 3 best things that ever happened to you. Were they caused by one thing, or a Lollapalooza of timing, skill, and relationships? The force field analysis. For your biggest current problem, draw a circle. On the left, draw arrows for every force pushing you toward your goal. On the right, draw arrows for every force pushing you away. Your job is to remove the away arrows and double the toward arrows. Identify the lead force. In any Lollapalooza, there is usually one force that triggers the others, often incentives. Find that lead force and change it first. Key takeaway. Extraordinary outcomes, both good and bad, are the result of multiple mental models and forces acting in the same direction. Learn to identify these Lollapalooza effects to predict the future. We have covered the philosophy, the psychology, and the mechanics. Now, we must bring it all together. How does a life lived this way look at the very end? In our final section, we conclude with the eulogy of a rational man. Conclusion. The eulogy of a rational man. The best thing a human being can do is help another human being know more.
Charlie Munger.
If you were to look at Charlie Munger's life on paper, you would see a massive net worth, seat at the head of one of the world's most powerful companies, and a legacy of financial dominance. But if you asked Charlie what he was proudest of, he wouldn't point to the Berkshire Hathaway stock price. He would point to the clarity of his own mind. To Munger, the pursuit of worldly wisdom was not a means to an end. It was the end itself. He viewed being rational as a moral duty. He believed that if you have the capacity to think clearly and you choose not to, you are committing a form of intellectual sloth that is deeply harmful to society. The deeper message: character over capital. The ultimate takeaway from The Complete Investor is that your investment portfolio is simply a reflection of your character. You cannot be a panicked, envious, and short-sighted person in your daily life and then magically become a patient, rational genius when you open your brokerage account. Munger's philosophy was built on a foundation of old-fashioned virtues: patience in a world of instant gratification, humility in a world of experts, integrity in a world of shortcuts, curiosity in a world of distraction. He lived by the inner scorecard. He didn't care if the world thought he was old-fashioned or out of touch for sitting on cash for 10 years. He only cared if he was following his own rational principles. If he stayed within his circle of competence, followed his checklists, and avoided the psychological misjudgments, he had already won, regardless of what the market did that day. The cultural and psychological impact. Munger's legacy is a direct challenge to the hustle culture of the 21st century. We're told that to succeed, we must be always on, always reacting, always disrupting. Munger offers a more peaceful alternative: the power of the learning machine. He proved that you don't need to be the fastest runner to win the race. You just need to be the one who never stops walking in the right direction. Psychologically, this is incredibly liberating. It means that success isn't about winning the lottery of a hot stock tip. It's about building a mental latticework that makes success an inevitable byproduct of your daily habits. The 5 practical principles for a Munger-style life. As we conclude, here are 5 principles you can carry into your life tomorrow morning. Collect mental models, not facts. Facts change. Models don't. Spend less time reading the news of the day, and more time reading the ideas of the century. Study physics, biology, and history to understand the gravity of human behavior. Practice selective inactivity in your career and your finances. Wait for the fat pitch. Most of your mistakes will come from doing things you didn't need to do. Have the courage to say no to the good so you can say yes to the great. Invert every hard problem. When you are stuck, don't ask, how do I move forward? Ask, what is keeping me back? And how could I guarantee I fail at this? Remove the obstacles before you try to add more fuel. Know your circle and guard it. Be a specialist in your actions, but a generalist in your thinking. Know exactly where your edge ends. If you find yourself in a room where you don't understand the language of the problem, have the humility to leave the room. Be a learning machine. Go to bed every night a little bit smarter than you were when you woke up. This is the Lollapalooza of self-improvement. It feels like nothing on day one, but over 50 years, it creates a gap between you and the rest of the world that is impossible to bridge. The final reflection. Charlie Munger passed away just shy of his 100th birthday. Still sharp, still reading, and still laughing at the standard shipwrecks of the world. He left behind more than just money. He left behind a blueprint for sanity. In a world that is becoming increasingly complex, volatile, and emotional, Munger's investing logic is a steady lighthouse. It reminds us that the most valuable asset you will ever own isn't a stock, a piece of real estate, or a Bitcoin. The most valuable asset you own is your own mind. How are you tending to it? Are you filling it with the cigar butts of social media drama and short-term panic? Are you building a latticework of enduring wisdom? The choice to be a complete investor starts today, not with a trade, but with a book. Not with an action, but with a thought. As Charlie would say, I have nothing more to add.